you think about what lowering rates does under this administration. It just unlocks so much money sitting there, trillions of dollars. And, people traditionally aren't very good at managing their money. Like, let's just be clear on that. I mean, our personal savings rate is at an all-time low right now. And went up during COVID when everybody got their stimmy checks, and then then it went right down, and then the credit card debt went way up over $1 trillion. Now it's significantly, it just keeps moving up. So essentially, everybody's buying on credit, right? And they're getting into debt, and I just don't think that what happens is, I think when you unlock, for a lot of people, when you unlock that money, it's not very frugally spent, right? Like they're buying trinkets, RVs and boats, and some people are doing improvements, and some people are doing investments, and some people are starting businesses. So I don't want to just throw a blanket over all of this, but there kind of has to be a purpose of the money. If you're going to borrow it at 5 and you're going to do a cash out refi at, let's say, 5, if you're lucky enough to get 5, an additional $100,000 to $200,000, there's a cost, right? And so the question is, do you buy a depreciating asset? Do you buy doodads, I guess, which Robert would call in his cash flow game that they do at Rich Dad. So those are the things that you got to watch. But I will tell you one thing that it does do when you unlock all that. It's essentially like everyone getting a $50,000 or $100,000 lottery ticket, right? That's essentially what it's like. Okay, so what do they do next? They go on vacation, they upgrade their car, they go buy, things. And so that does trickle into the economy. I actually think that that's what they're trying to do, is if we can get these rates down and people can, unlock another 50 to 100 grand, even stay in their existing home, just unlock some of that money that is sitting in their home right now. The question is going to be, what are they going to do with that? And if history proves to be, what it's going to do in the future, then I think that that's going to be spent on all kinds of stuff, and it's going to stimulate the economy, vacations and air and hotels and all that kind of stuff. You'll see. It's the same thing that happens when people get a tax refund, which happens. How many people do you know that actually talk about their tax refund going into their bank account? Like, what they do is they talk about what they're going to do with it, right? So that's essentially same thing. If somebody comes into money, they blow through it very quickly.
Yeah, and I just to show what a difference, these rates can make. I mean, just from my, say you had a $500,000 loan. I mean, just from going at 6.8 to 6.25, you're saving a couple $100 a month. But if rates were to go to 5%, which, they could over the next year, then you're saving $400 a month on a $500,000 mortgage. And to be honest, that's significant for people. That's a deal breaker for people. I work with people and we're solving to their monthly payment. And if they can afford a little bit more for their money, then they're able to actually buy something that they want.
Yeah. And by the way, I do believe rates are going to go down, and I do believe this is going to happen. I do believe this is going to get unlocked. But at the same token, I also believe that we're going to see higher unemployment this year and into next. And so, could it be like a net? You know what I mean? Like, it could be. It could mean that the economy doesn't really move too much.
Yeah, and I mean that's a good point. We're not going to see lowering rates unless we have some kind of recession. Now, how bad will that recession be? That we don't know. But I mean, if the unemployment numbers start to go down or, remain low, you're not going to see as much rate cuts as if they start to go up. But we're anticipating that they're going to go up because of AI, because businesses have slowed down. And I think, I forget who said it, but somebody was interviewed last week and they were saying that, these companies are blaming AI, but they're just kind of a scapegoat for them wanting to cut back, which could be true as well.
Well, I think probably both is true, right? But we have, I mean, there's all kinds of really smart people that I had dinner with somebody last week. We did that said that they believe that we're going to be in double-digit unemployment in 18 months. Okay, so think about that statement. Now, they could be completely wrong, of course, right? But this is somebody that has hundreds of AI patents and works in Silicon Valley. and as looking at it very differently than than us, right? And so again, it's just a conversation. Doesn't mean that it's going to be true.
So there's kind of two scenarios here. Like we both kind of agree rates are coming down. There's scenario A where they come down really slow and really cautiously. And then there's scenario B where they drop quickly, just like they went up quickly. And I think that is going to really depend on how the economy is doing, on which one of those things they decide to do, and how inflation is doing.
Yeah, I think yes, inflation and unemployment. Those are the
Mhm.
two. Those are the two big unknowns, right? We could see inflation. Typically, inflation does take a year to 2 years to actually show up. If you just look, you'll see. Same with rate cuts. Like you can see that there's a lag with all of this. Like if you
Mhm.
take a look at when we hit 9.1% inflation in 2022, that was actually from the pandemic. That was actually from the stimmy checks and a whole bunch of other things. There was a bunch of money thrown at businesses and individuals, and that showed up. It peaked in June of 2022, right? So there's lag. There's lag when money hits the economy, and there's lag when interest rates hit the economy, and there's lag when interest rate cuts. But the one thing is for sure, if we're starting to see unemployment creep up and we're starting to see inflation creep up even more, then I can assure you they're going to try to combat that with lower interest rates.
Yeah, and you brought up the lock-in effect for sellers, and if, sellers, this is why Trump wants the accelerated, right? He wants all of that equity unlocked. He wants people to be able to move, to go, a big family to get a bigger house, a first-time home buyer to be able to get in the market, a retiree that to want to sell and downsize. But right now, like because everything's so frozen, there's no incentive for that family to upgrade houses. It'd be way too expensive. There's really not much incentive for this retiree to downgrade houses because they're really not saving that much money. Um, and the first time home buyer's priced out. So he really wants to fix all that. So the aggressiveness is what he wants because he sees how much is locked up and pent up and how much that would stimulate the economy between mortgages, between title companies, between realtors, between, movers. I mean, everything. Like a real estate's a huge part of our economy. And so he sees all that, but we're just going to have to wait and see, how this unrolls. I think May will be interesting because that's when the new Fed chair gets in, give him maybe 30 or 60 days and then kind of. But I also think Trump really likes the big announcements. So it's like,
Yeah.
this is my Fed chair and like
Yeah,
we're
yeah.
rolling this out and this is what we're going to do. So it'll be interesting.
Yeah, I don't know. It's clear what we can't get around this affordable housing problem, right? And so he's been talking a lot about it. 50-year mortgage, portable mortgages. He was talking about using your 401k money and your retirement funds and all this stuff, and and he just keeps taking bullets, on those issues. But he keeps throwing all this stuff at the wall to try to figure out an affordability play, a way to unlock equity, and a way to get people into housing. I actually do agree with that kind of vision. It's going to be very interesting on how we get there. If you go back and look at the administrations before, Clinton had an American Dream vision, Bush had an American Dream vision, Obama had an American Dream vision. So America, and typically that American Dream is owning a home, and so I would bet that there's going to be something rolled out more along that line. There's going to be programs or policies that get people into homes, because we cannot have a nation of renters moving into the next decade, because what will happen is the decade after that is going to finance them, right? What's like, you guys all know I talk about my mom all the time. My mom was a hairdresser. My dad was in construction. I grew up in a great family, but at the end of the day, they hardly have any savings, if any, and most of their money is sitting in their home, right? And their home is paid off, and that's just it. And so what if they didn't have that? What if they were renters for life? They would be in big different type of scenario. So that's actually what I'm most concerned about, is that, like, we need to get these youngsters, or not even youngsters, just people into that home. They need to start paying down their mortgage. And I'm saying this as a landlord. I mean, we make our money on renters, but the reality is it's not good if people are forced into rentals.